Welcome to FatCity Finance. We've got 5 dividend stocks with high yield for you to consider this year. As we embark on this journey, remember, the world of investing is constantly changing, and we're here to navigate it with you. So, to stay updated with the latest trends and insights, don't forget to hit that like button, subscribe, and ring the bell for all the latest updates. Now, without further ado, let's dive into these 5 high-dividend stocks you should consider for your 2024 portfolio. First up is Nu Skin Enterprises Inc., a leading player in the personal care products industry. Nu Skin, known by its ticker symbol NUS, is not just a player, but a seasoned veteran on the field. The company has a robust dividend yield of 5.3%, which is a significant draw for dividend investors, but that's not all. Nu Skin has been consistently increasing its dividend for 2 decades. Yes, you heard it right, 20 consecutive years of dividend increase. That's a testament to the company's financial health and commitment to returning capital to its shareholders. Now, let's talk about the company's geographical footprint. Nu Skin has a strong presence in the Asia-Pacific region, a market that's bursting at the seams with potential. This strategic positioning allows the company to tap into the burgeoning middle class in this region, who are increasingly seeking high-quality personal care products. Equally impressive is Nu Skin's loyal customer base. In a world where brand loyalty is becoming increasingly elusive, Nu Skin's ability to retain and grow its customer base speaks volumes about the quality of its products and the effectiveness of its marketing strategies. To give you a clearer picture, let's take a look at some data and charts. Over the years, Nu Skin's revenue has been on an upward trajectory, reflecting the company's strong performance. Meanwhile, the dividend growth chart paints a picture of a company that's committed to sharing its success with its investors. The dividend yield chart, on the other hand, shows a steady yield, making Nu Skin a reliable income stock. In summary, Nu Skin offers a compelling mix of a high dividend yield, consistent dividend growth, a strong presence in a high-growth market, and a loyal customer base. With a dividend yield of 5.3%, NUS is definitely a stock to keep an eye on, so if you're in the market for a high-yield dividend stock with solid fundamentals, Nu Skin Enterprises Inc. should be on your radar. Next on the list is Altria Group Inc., a titan in the tobacco industry. When it comes to dividends, Altria is a heavyweight contender, sporting an impressive dividend yield of 7.8%. But a high yield isn't all that Altria brings to the table. It's not every day you come across a company that's increased its dividend for over half a century. That's right. Altria has raised its dividend for an incredible 52 consecutive years. That's longer than most of us have been alive. This is an outstanding track record that not only demonstrates the company's commitment to returning capital to shareholders, but also its ability to generate consistent cash flows. Now, let's talk about Altria's market presence. This company has a dominant market share in the United States, being a leading producer and marketer of tobacco, cigarettes, and related products. Its flagship brand, Marlboro, is a household name, and has been the #1 selling cigarette brand in the US for more than 4 decades. But Altria isn't only about tobacco. The company has a diversified portfolio that includes non-tobacco products as well. Altria has made significant investments in alcohol, e-cigarettes, and even cannabis through its stake in Kronos Group. This diversification allows Altria to hedge against the declining trend in traditional tobacco usage and opens up new avenues for growth. So to sum it up, Altria Group Inc. offers an attractive dividend yield, a history of dividend increases that's tough to beat, a dominant market share in the US, and a diversified portfolio that's poised to capitalize on new market trends. With a yield of 7.8%, Missouri is a stock that packs a punch in the dividend department. Moving on, we have Walgreens Boots Alliance Inc. and Enbridge Inc. Let's start with Walgreens Boots Alliance Inc., a pharmacy retailer that's been boosting its dividends for a remarkable 46 consecutive years. Not only is this a testament to the company's financial stability, but it also speaks volumes about its commitment to rewarding shareholders. Walgreens stands out with a dividend yield of 8.1%, which is quite competitive in today's market. The company's global footprint plays a significant role in its resilience. With thousands of retail locations around the world, Walgreens has a wide customer base that contributes to its robust and consistent revenues. And it's not just about the number of stores. Walgreens has strategic partnerships with tech giant Microsoft and logistics leader FedEx, collaborations that enhance its operational efficiency and customer reach. Now let's shift gears to Enbridge Inc., an energy infrastructure company. Enbridge sports a slightly higher dividend yield than Walgreens, standing at 8.2%. Like Walgreens, Enbridge has a long history of hiking its dividends with 26 consecutive years under its belt. This is a clear indicator of the company's strong financial discipline and its priority to share profits with its shareholders. What makes Enbridge particularly appealing is its stable cash flow generated from long-term contracts. This allows the company to maintain and increase its dividends even in challenging market conditions. Additionally, Enbridge's diversified business mix, spanning oil, natural gas, and renewable energy sectors, provides a buffer against sector-specific risks. In a nutshell, both Walgreens Boots Alliance Inc. and Enbridge Inc. offer attractive dividend yields, backed by their long-standing commitment to growing dividends. Their strategic alliances, diversified operations, and stable cash flows further strengthen their positions as solid high-dividend stocks. With yields of 8.1% and 8.2% respectively, WBA and ENB are strong contenders in the high-dividend stock arena. Last but certainly not least, we have Annaly Capital Management Inc., a standout in the mortgage REIT space. This company, often referred to by its ticker symbol NLY, is a real estate investment trust that specializes in investing and financing residential and commercial assets. NLY stands out for a number of reasons, but the most compelling is its high dividend yield. This company boasts a dividend yield of 10.4%, significantly higher than the average yield of S&P 500 companies. It's a yield that's hard to ignore, especially for those who are looking to add some high-dividend stocks to their portfolio. But the high yield isn't the only thing that makes NLY attractive. This company has a decade-long history of maintaining or growing its dividend. That's 10 consecutive years of providing its shareholders with a reliable income stream, which is a remarkable feat in the volatile world of REITs. On top of this, NLY has a conservative leverage ratio. This means that the company doesn't rely heavily on borrowed money to finance its operations, which makes it less vulnerable to interest rate fluctuations and financial downturns. This conservative approach to leverage can give investors some peace of mind, knowing that the company is not taking on excessive risk. Finally, let's talk about NLY's flexible capital structure. This company has the ability to quickly and efficiently adjust its capital structure to respond to changes in market conditions. This flexibility allows NLY to seize investment opportunities as they arise and to manage risk more effectively. So there you have it. Annaly Capital Management Inc. is a high-dividend stock with a solid track record, a conservative approach to leverage, and a flexible capital structure. If you're looking for a high-yielding stock that can provide a steady income stream, NLY is a stock that's worth considering. With a whopping yield of 10.4%, NLY is a high-dividend stock that's hard to ignore. So there you have it, 5 high-dividend stocks that could bolster your portfolio in 2024. We've journeyed through the robust personal care industry with Nu Skin Enterprises, boasting a noteworthy dividend yield of 5.3% and 20 years of consistent dividend growth. We've navigated the tobacco industry with Altria Group, a giant offering a hefty 7.8% dividend yield and over half a century of dividend growth. Our path led us to the pharmacy retail sector with Walgreens Boots Alliance, flaunting an 8.1% dividend yield and 46 years of dividend boosts. We've traversed the energy infrastructure landscape with Enbridge, a reliable player with an 8.2% dividend yield and 26 years of dividend hikes. Lastly, we've explored the mortgage REIT sector with Annaly Capital Management, offering a staggering 10.4% dividend yield and 10 years of maintained or grown dividends. Remember, the essence of a strong portfolio is diversification. These stocks represent a variety of sectors and could be an excellent way to diversify your investments. However, these are just suggestions and not definitive investment advice. Always conduct your own research and consult with a professional before making any investment decisions. Don't forget to like, subscribe, and ring the bell for more finance insights from FatCity Finance. Thanks for watching, and as always, happy investing.